Hello, everyone, and welcome to another edition of Bleeding Crypto's Market Update. Today is Monday, June 5th, and it's been about a week since I've done my last update. Yeah, maybe a little bit more. I think it's been about a week. I think today is a great day to do an update because we're falling, we're coming down. We just had some news, and I know there's a lot of fear in the market, and this is really the best time to focus on not only yourself, but on the charts as well, and how that fear reflects on the charts. If you look at the overall charts and you look at however you put your candles on your chart, whether you use the green and red or you use the hollows or the line chart, I prefer the green and red. Green and red is, to me, a representation of greed and fear. Greed obviously being green and fear being red. And you can see that this is nothing more than just a play on human emotions. When people are greedy, when people are fearful, and I think just based on that alone, using nothing else, you can kind of come up with a plan on when to buy. When things are looking what? Good? When things are popping off? When everyone is euphoric? Or when things are fearful, when things are dropping? Obviously, you never know what the bottom is going to be. But if you dollar cost average your way down, as fear is coming into the market, is it really a bad time to buy? I don't think so. Now, that's for the more general public. But for people who are more in tune into crypto, people who are more in tune into investing, maybe swing traders, day traders, even scalpers, we take a different approach. It's similar, but we zoom in and we focus in a little bit more, and we dig in deeper into the charts to help us come up with a little bit more of an accurate buy-in targets as we define who we are in this space. Whether we're a swing investor, long-term swing, day trader, or scalp, we're going to narrow that focus depending on the time frames we look. Will define really who we are. If you're one that lives in the 1 and 5 minute, you're a scalper. If you live in the 15 minute to an hour, you're a day trader. If you're looking 4 to 12 hour to daily time frames, you're more of a swing trader. If you're looking at the weekly, monthly, you're a long-term investor. So we're going to kind of cover the more broader sense, the more macro view of everything, and we're going to go in a little bit on the chart. We're going to zoom in maybe to the 4-hour time frame and just kind of see locally where we are, what we sit, what we need to look at to define if it's a good time to buy, depending again who you are, or even just to look at where some of the areas of interest are for some support to come in. We know that when we're dropping, guys, it always seems the worst. It always seems like, okay, we're going to go down to the abyss. And it's very rarely like that. There usually has to be a very big catalyst. Now, we know we've been expecting a higher low for a while. We've been waiting for something to happen, and we never know what that news or that catalyst is going to be ahead of time. But we do know is that there's always a reason. It's one of my favorite. There's two lines that I use quite a bit in my analysis and through my years of doing videos for you guys. One of them is, there's always a reason why. Meaning there's always a reason why we fall. We just never know what that reason is. And the other one, give me 1 second, guys. Let me answer this real quick. Okay, sorry about that. The other one is, I lost my train of thought. I went to answer something. 1 second. Sorry about that, guys. I had a complete brain fart when I got distracted. So yeah, one of them is we never know the reason why, but there's always a reason. And the other one is the market is not here to make you money. Remember that, guys. The market is not here to make you money. We try to come up with a game plan to just really grab the scraps that the whales leave behind. If you think that you're smarter because you made a couple bucks off of a trade, the big moves, guys, are way above your pay grade, way above your head. You may think you're a hero in your little world, but you're really not. But if we pay attention to the signs that the market makers leave behind, we can make a pretty good living. We could really make a pretty good living. Now, let's go ahead and dive into the charts. Let's start off here with the daily. There's nothing on my charts, no lines. There's really nothing going on. Actually, let's do this. Let's look at the weekly real quick, just to get a quick macro view of what I'm looking at for a bottom and top. So for right now, I would say this here would be a good top range, and I'll explain to you why. If you look at, I like when I grab a top, when I'm trying to define a top, I like looking for candle bodies. So here we have a candle body touch on this line for support and a candle body touch here for resistance. And then we've got some here close to it. We've got some wicks. So it's pretty subjective. You can raise it up a little bit higher. You can encompass this wick if you like. But again, just my preference is probably right here. We haven't quite hit that yet, but we've gotten really close. Just like we didn't hit the candle bodies on here, but we got real close. So I'm going to define this. And I'm using the Bitstamp, guys, because I want to go back and I want to look at some halvenings. And I want to kind of come up with a game plan with you guys for when do we normally see a bottom prior to a halvening. We're going to touch on a lot of that today. We're going to look at the heat maps, at the derivatives, at the spot market, and we're going to come up with a game plan of some likely scenarios for the upside and for the downside. So let's look at the bottom. Obviously, the bottom, that's pretty easy to define since it was right in here. And guys, do I think the bottom is in? Yes. I think the bottom is in. As much as people think that it's going to go lower, and it can, you have to prove it to me. I can't tell you that the bottom is not in when the market has proved to me a reversal. I can't have a bias. I mean, I could have a bias of my own personal bias, but as a responsible technical analysis, an analyzer, better said, who is going to give their opinion to an audience that maybe is learning technical analysis or is not quite sure of what's going on in the market, I don't think it's responsible for me to sway them in one way or another by my bias. I can tell you without a shadow of a doubt that Bitcoin is going high, hundreds of thousands of dollars without a shadow of a doubt. But that's the overall macro look of Bitcoin. Most of us here in the space believe that. But when you're looking at the charts, you have to make a case for it. Show me a case right now of a bias, of a bull and a bear, and then give yourself invalidation points. And then depending on which one of those points hit, you then shift. I put a post last week, better said, where I put that I am during the day, if I'm looking at the 5 and 15 minute chart, I flip from bear to bull 10, 15 times a day. If I'm looking at the hourly time frame, I'm flipping bear, maybe 4 or 5 times a day. If I'm looking at the daily chart, I'm flipping bear and bull maybe 4 or 5 times a month. It just depends on what you're trying to achieve. If you're trying to get into a scalp trade, you're going to be flipping constantly maybe twice an hour. You're going to be going from bear to bull, bear to bull, bear to bull. But when you're zoomed out and you're looking at a daily and a weekly, you have to understand the difference between a low time frame and a high time frame. The high time frame is telling us that the bottom is in. There's nothing about this time frame that tells us we're going to 12,000. Many of you who follow me know that I was telling you that I was expecting Bitcoin to go to $11,377 based on 0.886. And when was I telling you that, guys? Do you remember that? I was telling you that in here. In here. Not in here. And I was very clear on every single video that I made, every guest appearance that I made a very clear invalidation. I told you guys that when this lower high structure is broken and we reversed, then and only then will it invalidate my thesis of 886. and I've told you this many times, this candle here. And it's funny because those who follow me have heard me say this, and yet I still get DMs telling me, what happened to your 886? What happened to your 886? And I'm just like, wow. So this is why I have to repeat it. I have to sometimes treat people like they're 5-year-olds, and I got to keep on repeating it so they understand that as an analyst, you have validation and invalidation. So for right now, we are in an uptrend. We are in a recovery stage. 2022 was the bear market. 2023 is what I call, and this is my own personal label. I didn't get this. I don't know if that's the technical term. I call it the recovery market. This is the market like in 2019 where we basically start turning things around, where we look for opportunities, where we find out if we're going to continue in a bear or do we start seeing reversal signs. This candle here with this type of volume, this type of upthrust and invalidation of the prior lower highs did it for me. And I've been saying we need to find a higher low to continue that structure. If you are bull, you need to see a lower high. You need to accept the bear if you are a bull. Always remember that. You cannot be a bull without the bear, because that will never end well. A parabolic move never ends well. A structured move is what we need to get to 150, 200,000, 400, $500,000. We need that structure. You're not going to get it by one straight candle up there. So that being said, many didn't think that we would come down again this low, and I want to show you something, guys. This is important because, again, this is going to be subjective. A lot of people are putting the support line here. Okay. A lot of people are putting the support line here. And many were saying, nope, we are still holding support, and then we're using this very last wick right here on this wick right here. We can do that. But the market is telling us, no, we are not in a flag pattern. We are not at support. We are coming down. And once again, we just put in a lower low. We just put in, again, another lower low. Now, does this mean that we're going down to 15,000? No, not at all. We've got areas that we need to look at and we need to focus. But first of all, we need to understand who is driving this market. Is it retail? Is it your neighbors? Is it your relatives? Are they calling you to buy Bitcoin? No, they're not. Are big institutions coming in here? No, they're not. Who's driving it? Who's pushing these prices up? Who's pushing these prices down? Who benefits the most from the movements of Bitcoin right now? You think crypto Twitter is pushing this market? You have to understand who is in the driver's seat. And I'll tell you right now who is in the driver's seat. The derivatives market is in the driver's seat. So if the derivatives market are in the driver's seat, how do you not pay attention to the derivatives market? How do you not take the time to understand how that market works and what fuels that market and what moves that market? Keep in mind, there's always going to be outside forces like, for example, today's Binance announcement that the SEC was coming after them. And we knew this was coming. We were talking about that 6 months ago when they were blatantly manipulating the price of Bitcoin for them to basically liquidate all the orders in the derivatives market. They were having, on a daily basis, we're having Twitter Spaces talks about that. And it went on for weeks and weeks and weeks. When did it stop? The moment the SEC says we're going to investigate Binance, the very next day, Binance shut down free spot trading. The very next day, they said, oh shit, we got caught, motherfucker. Oh, and they just shut it down. Am I mad about that? No, not at all. All markets are manipulated. All of them are. There's no laws in crypto. There's no regulation in crypto. So yeah, of course you're going to expect it. The thing is knowing and understanding how to use that information to your advantage. So let me show you some information that I think will be really helpful in determining where the price of Bitcoin is most likely headed and where it's going, so that you can get a good understanding and not be led by fear or by crypto Twitter or by your favorite influencer, anything else other than the facts. Allow the facts to tell you, to show you, better said, where the most likely area that Bitcoin is going to hit. I'm going to start off with HyBlock Capital. There is another friend of mine, daily crypto trader. He created a very similar tool to HyBlock. I've been using it. I'm learning how to use it, but I'm going to use HyBlock for now. But I encourage you guys to join his Discord, and he can give you, I think he gives you a 3-day free access, so you can check it out. But only because I'm a lot more familiar in how to navigate through here, I'm going to use this for now. But his has not only these heat maps, but he has a scanner that helps you identify alts, all the alts, and which ones are bearish and which ones are bullish, and gives you good signals for setups as well. So something to consider. I just want to plug that in because I really enjoy his. He's not paying me for this, guys. So I just want to let you know. When I'm excited about something, guys, when I like something, when I appreciate something, I like other people to know about it. I'm not going to hide it. We're all here to help each other. We're all here to help uncover tools and patterns to help all of us together. We're all a community, guys. None of us here should have the attitude that we're competing against each other. No one. If anything, you know who we're competing with? We're competing with the old school boys, the old boys club. We're competing with the banks. We're competing with the system. We're competing with the government. That's who we're competing against. Everyone listening to this and everyone on Twitter should be united. Unfortunately, a lot of times it becomes like little high school cliques where everybody wants to be better than everyone else. And that is the wrong attitude to have here. You need to work together to help each other. If we don't help each other, who will? Then the banks, the government, all those whales, they're the ones who are going to win and take our money. So let's go to the heat maps. Let's go to the heat map, and I'm going to give you a quick breakdown on how to read these maps. I'm going to do that. I'm going to start by the 12. There's different time frames on here. So I'm going to start off with a 12-hour time frame, and I'm going to do an aggregated look at the 3 exchanges that HyBlock offers. Okay. What this means here basically is it's looking back 12 hours. That's it. 12 hours, and in the past 12 hours, the accumulative clusters in liquidations right now are here to the upside. At the moment, they were to the downside. So this yellow was actually down here. We've already broke through it, and we've already ate through those. Now we have right in here. Look, we have 26.9, 27.2, and then we've got 27.725. And these are the clusters that have been forming in the past 12 hours. Okay, now let's go to the 7-day. Looking back 7 days, the accumulative heat, both for upper and lower, what has been building in the past 7 days. And you can see here, I'll go from here. I'll even go here. You can see here, past 7 days, we've been building to the top. Now, we had a good case to continue up here until we got that news from the SEC about going after CZ. So now things shift, things change. We have to pivot with it. And I'm not going to sit here and tell you that this move was caused by derivatives, because it wasn't. It was caused by the SEC and the news it gave out. But you can still use the derivatives to understand where is a good place for them, for the whales and the market makers, to hold the price. Now, what I mean by that is, with an accumulative $5 billion in liquidations in this area here, it benefits the whales and the market makers to help support the price of Bitcoin and allow them to come up here and grab some of this before going down. Right now, the bias is to the upside on the smaller time frame. This is a 7-day look. That would be considered a smaller time frame. Now look at this. Let's look at the monthly. So far, hopefully I haven't lost you guys. It seems pretty cut and dry, pretty simple. Now, when you look back a month, things start to shift. In the past month, the accumulation of all the fear and all the greed has now led for higher clusters to the bottom. What does this higher cluster mean? This means that people are bullish. Okay, think about it. This is not, don't think of this as you would in the charts. This is an inverse look of what people think, fear and greed. So this here is greed. This here is fear. And I'll explain to you what I mean by that. When you long, you automatically start creating a profile below the price action, meaning that you are betting that the price is going to go up. And every derivatives contract has a liquidation point. So your liquidation point is going to be below the price action. So the more people long, the more confident, the more greed there's in the market, the more of a profile to the bottom, meaning that if the market makers play against you, if they counter trade you, this is the area where the most liquidations are going to happen. And as you can see from these clusters, a lot of people think about this, think very similar, as the clusters are very close together, meaning that people all get excited at the same time and people all get fearful around the same time because these numbers are very close together. So these liquidation points are people who are bullish. People here who are bullish, they're longing. But the market makers are saying, hey, look, this point here, if I come down here, I'm knocking them out. And when you look at these liquidation clusters, you start and you chart them, you plot them on your chart. It's eerie, the confluence that you start to find out and you start to line up with support, resistance, with certain areas in your chart using completely other metrics to find confluence with these clusters. Now, here's the one that I really want you guys to pay attention to. The past 3 months. In the past 3 months, people have been uber bullish. How do I know this? Because look at the liquidation clusters below. Remember, the inverse. People, and if you look at Twitter, everyone is the moon, the alta coming up, everything's going to explode, banks are collapsing, Bitcoin to $1 million. I've heard it all this year. I've heard it all. Everybody's like, we're going to go to 34th. Everyone is bullish. And look what happens. As people get more and more bullish, see how it gets more and more intense? People are feeding into that. People are like, yeah, let's do that. Let's do this. And look, as the price continues, it gets brighter and brighter and brighter. In here, guys, $74 billion in liquidations if the price can come down to 25,200. Here, $71 billion. $71 billion just in this area here. All of these represent, look, this is 30 right here is 56 billion, 33 billion, 36 billion, 50 billion. So you can imagine there's hundreds of billions of dollars in liquidations for the market makers to make down here. So when you want to become bullish, guys, when you want to say, yeah, we're going to go to 50,000 to 40,000, you have to understand that the market makers are going to make a lot more money when you think like that, because they're going to counter trade you. And when before you get overly bullish, understand how the derivatives markets work and understand the power of what this is telling you. It doesn't mean we're not going to go up. It just means before we get there, they have a chance to make hundreds and hundreds of billions of dollars. So this will give you a more grounded approach. It will allow you to have a realistic approach so that you're not thrown for a curveball. So if you're fully bullish and you think we're going out 50,000, when it drops, are you going to be fearful? Or are you going to be just as excited as you were here? Because if you're excited here to go to 50,000 and you're buying here, why wouldn't you buy here? Because if you don't follow this data, how do you know? Your first thought is we're going to 15,000, we're going to 12,000. But if you know that the last major cluster is here at 21,400, that gives you a much different view on the market. You're more apt to buying at 21.4 or at 22.6 or at 25,000, 25.2, because you remember the liquidation. That there was a good reason to go there. You can start scaling in. Now let's do this, guys. How does this help us? Well, this is how this information helps us. 25.2 is the last level, and I'm going to zoom in real quick here. I'm going to zoom in just to get a better view. And we're already biting into it. We already went down to 25.4. We already went down to 25.4. So now we are, look at it, they made a ton of money today. Wow. End of this major cluster is at 25.4. Then we've got this cluster is already starting to get it pretty bright. Look at 63 billion. This is at 24.2. And then we've got the end of this cluster here is at 25,000. Then the cluster begins here at 24.8 and it ends here at 24.2. So let's utilize the end of this cluster here at 25.2, and let's look on our chart what 25.2 represents. Let's go to 25.2, and we're going to make this yellow, 25,200, and we're going to find confluence. Now, tell me who cannot. I'm going to go ahead and erase these lines here because I don't want to cloud up the chart. We don't need these. We already broke. We put a new lower low. So everybody who's making a case that support was holding, no, it's not. It broke through. We put in, once again, another lower low. So that case is done with. Nobody can talk you into that support held. Support didn't held. And this was if you look at the daily, gives you a much better story. We had an M top, a double top that broke down. The confirmation was here as we back test the neckline, and now we just put in a lower low. So that case is done. Finish. You have no leg to stand on if you know how to read the charts properly. Okay, so now I'm going to make a case. Now look at this. 25.2. What do you know? Lines up absolutely perfect with the top of these wicks. Look at that. Fucking tell me how perfect and how much easier it is to understand the reason for going into that area there. Now, we're not done yet. The next cluster down below, right here, at 24,000 to 24,400. Let's see, 24,000 to 24,400. You know what? I'm going to move this over right next to the high block. Perfect. 24,200. Let's do this here. Let me change this. 24,200. Well, what do you know? Candle bodies. Remember, this was 24,400 and 24,200 ends it. And this begins at 24,400. So let's put 400 real quick. Look at that. Lines up right there. Both of those. 24, that whole little $200 cluster is the candle bodies of the wicks, of the candles that created these wicks here, that also have an area where price stopped at that farmers could not break it until we reversed the trend with this candle. So do you see how this cluster makes sense? Do you see how you shouldn't be fearful for this cluster? And this is a great place to scale into the price. Now let's go into the next cluster. Next cluster is a 22,800 to 22,600. So we're going to do that in a form of a bar. 22.7 to 22.3. 22.7 to 22.3. So let's do this. 22.7 to 22.3. 22,700 and 22.3. 22,300. So this little cluster in here is our next area. Right in here is the area in HyBlock where the next area of liquidations lie at. Right in here. Remember, we're looking for a higher low against this here. A higher low against this. for the next bounce. Okay? And I've done this many times. When you put the fib to find out where those areas are, look at how this last liquidation cluster lines up perfectly inside of 0.786. The top of this very close to 618. No reason why we can't have a wick to 618 and candle body closes right in here. Or even if it goes even further down, we're still within a reload area. We're still within a good established zone for a higher low, just like we had in here. When you take the low to the high, look right here, 618, we're pretty much at 618. We don't have to exactly touch it. You can see here where we bounced. Now, here's another thing you have to think about, guys. See this wick here? You see this wick? All this liquidity in here? This will get tapped at some point. This will get tapped at some point. When that happens, I don't know. We had one that I kept on focusing on with my group at 16,000, and it took a year, I think a year or 2 years for it to hit. And it's this one right here. Look at this wick. You see this wick? This wick was it took 2 years. At 2000, November of 2000 of 2020. See this wick right here? This wick, it filled, completely filled right here 2 years later. Literally 2 years to the date. Look, November 23rd, November 7th, 2022. It completely filled. Look at the candle body here. It completely filled. 2 years. This is going to get filled. At some point, this will get filled. Now, typically, I want to see minimum 3/4 of the candle fill. Doesn't have to fill all the way. Sometimes they fill all the way, but my rule is at least 3/4 of this candle. Is this going to come here, put a higher low, and then put a higher high before coming down and filling this wick? Yeah, could. I don't know. I really don't know. But all I do know is that the charts and history tells me the probability is very high, and I don't want to bet against it that this is going to get filled. It's not going to keep me from buying, though. It's not going to keep me from buying a down market, because as I don't know where it's going to land, I'd rather scale into points of interest, points that make sense. These liquidation data, look, we're getting closer and closer, even as I'm speaking, into these areas here. We're looking for that higher low. Now, let's look at this. Let's look at the 12-hour time frame. We're going to look at the halvening. Look at the 12-hour time frame. Look at where we're at. Look at this. Look at this cluster here. And yet, look where the cluster of HyBlock is. Right inside of this liquidity. Right inside of here. Look at this. Look at these areas of where we're at. Look at these on the daily time frame. And if you guys follow fair value gaps, look at this fair value gap right here. Between there and there. You see that? Look at that. Look at that fair value gap there. Look at the fair value gap here. Look at this one. Between there and that wick right there. Look, right there and right there. Fair value gap. Look at that. There's a lot of... There's a big pull, like you could think of it as a magnet pulling at that price. But even with all of this here, you cannot get ultra bearish. Why? Because think of all the people that are right now shorting for this move down. Every time you short, you are adding a probability that the price is going to go high. It's going to turn around to liquidate them. I gave this example to my team. I think it was last week. When you look at price dropping or price going up, think of it as a hot air balloon. You have a basket. You have the conductor who takes the weight of people. Based on the weight of those people, he knows how much of the gas to put in to the balloon, how much heat to put in the balloon, how much gas to release to get the balloon to go up. But now imagine this. The price is going up. The price is moving. Everything's calculated. And then there's a ladder over the sides of the basket. And people are running up and grabbing on hold of that ladder and jumping on at the last minute. What do you think is going to happen to that basket as it's going up? You think it's going to continue to go up freely? No. It's going to pause. It's going to hold on. Now, the conductor's got to look over and calculate the price Not the price, the weight of the people, and then have to figure out how much gas is going to be needed to get that balloon back up in the air. Same thing with derivatives, guys. When this is going down, they have a calculation of what the payout is. Because remember, someone's getting paid. Right now, the shorts are getting paid, and they have that calculated. As more and more people jump on, they now have to recalculate what the payout is going to be. And if the payout isn't to their benefit, what happens? Let me show you what happens, guys. This is really, really interesting to see this broken down into small clusters. What that is like. I'm going to go back here. I'm not even going to look at this. This is a mess here. I'm not even going to try to show you this. I'm going to show you this little past area right here, just to show you what happens. As price is going up here, these are the people jumping into that hot air balloon from the ladder. And then the price stops, turns around, and then liquidates all of these people here. As the price is going down to liquidate these people, all of these contracts jump in and say, hey, I'm going to jump into an $80 million short, $79 million short, $38 million short, $25 million, $72 million short. I'm going to jump in. What do the market makers do? I don't think so. They then come up and knock everyone off of here. They liquidate, and they do this all day long. Now look what's going on right now. Look at these clusters. This happens once in a while, and it's out of control. Look at this. Look at this. Look at the delta. Massive liquidations that we built in the past 2 hours. We went from 2 billion. Yeah, it was 2.1 billion. In a matter of hours to $15.6 billion, $15.65 billion. Do you think we're just going to go straight down to 15,000? No. The market makers won't allow it. Regardless of the catalyst, the likelihood is that we're going to turn around and we're going to knock out a lot of these contracts that are jumping in. Let me show you some of the contracts that are jumping in here at the last minute. Look at these contracts. As we were going down, all of these bubbles here, all these local clusters were jumping in. And as we came up, we knocked out $202 million. We liquidated $98 million, $202 million, $83 million, $51 million, $40 million, up until right here, look, $98 million, $178 million. But you still have all of these here. You still have all of these, and then you have these guys jumping in at the last minute. Look at this guy, jumped in at $112 million. And they just came right up, look, right up, and they just took it out, and they continue to go down. You got to see this, guys. This is fucking insane. The price literally just fucking went up and said, no, fuck you, and came right back down. This guy, poor guy, he was thinking, I'm going to buy a beach house. I'm going to go in, $112 million. He thought he was smarter than the market. Market came up and reminded him who is boss. And just as soon as they took him out, it kept on going down. Look at all of these guys thinking they're smarter than the market. So at some point, as we go down, and I don't know how far we're going to go down, we will be moving up to liquidate them. Now, what goes against the traders is this here. The higher this accumulative delta becomes, the higher the probability of having a short squeeze. You hear that term all the time, but a lot of people don't understand it. This is why a short squeeze happens. There's 501 liquidation contracts on Binance against 83, meaning that 501 contracts are betting to the downside, only 83 to the upside. If we continue to drop, who does the market maker pay out more to? The longs or the shorts? Obviously, the shorts. So it's to their benefit that we continue to move up. Let's look at the spot liquidation. Look at the spot liquidation, guys. We're almost at the major cluster of support at $25,000. There's a massive amount of buy wall right there. Hopefully, we'll hold the price. They put another smaller one here at 25,300. And what a coincidence. 25,300? Remember these wicks? Remember these wicks we talked about? Look. Here's 25,300 right there, right there. That top wick right there. You see how all of this starts to line up? So let's drop down to the 4-hour time frame. What do we have? What do we have in the 4-hour time frame? Well, We've got very close to this next cluster. Couldn't see why not we don't hit this here. Maybe even here. But at some point, as we continue to go down and people continue to increase that delta, there's going to be a short squeeze. There's going to be a turnaround. Now I'm going to put on my momentum indicators, and I want you to. And let's look at the weekly. Look what the weekly's done. The weekly has now turned bear. Has now had that crossover. Look at history. What has history taught us that when the MACD crosses bear on the cross indicator, what happens? Look, what happens? Look, what happens? Look, what happens? Don't take my word for it. Don't take my word for it. If you're a bull, it's okay. You don't want to believe me, that's fine. But don't close your eyes to the data. The data is right there. Now, I'll give you this. We just started this weekly time frame. We just started. Here's what happens with this MACD. If we were to do a big green candle to the upside, literally, if we put like $1,000 candle to the upside, it would reverse this. This would pull back. This would pull back. So there is still time. I'm not saying that all hope is lost for the bulls. Not at all. Not at all. But you have to take all of this into consideration. You cannot close your eyes on it. Look at the daily. Daily as well. The daily, look. Double top, down. Look at here. Look at this. Look at this head and shoulders on the MACD. Broke down. Look at this. Look at this double top here. Look at this double top in here. Broke down. Look at this W here. We broke up. Look at this M top, double top, broke down. Look at it on the RSI. You probably see it better on the RSI. What do you see before we drop on the RSI? M's. Look at this, double tops. Look at these M's. We drop. Look at these M's. We drop. Look at these M's. We drop. What do we see when we're going up before we go up? Look at this. W. Look at this. W's. Look at this. W's. W's. I mean, it's not that difficult. Look at this. W's and we go up. Why does everyone only see the W's and no one sees the M tops? No one sees the M tops. It's incredible the bias that people have. And then they complain about, oh, it's a scam. Oh, we couldn't have known. Yes, you can. If you just stop allowing your bias to interfere of what the charts tell you. It's not difficult. This stuff is, elementary. You see an M, it's bearish. You see a W, it's bullish. You can literally teach this to a 5-year-old who understands the alphabet, who understands 2 letters of the alphabet. A W and an M. That's it. That's all you need to know. Out of 26 letters in the alphabet, an M and a W. And yet people still don't understand why we dropped. I didn't see it coming. Really? You didn't? Now look at where we're at with the weekly time frame. Look at this. High, low, lower high, lower low, lower high, lower low. Come on. What part of this is telling you that a bull run's going to start? None at all. The moment we cross this 50%, this 50-point line, you can pretty much kiss your bull run starting this summer. We're going to talk about the bull run in just a minute. We're going to look back at the halvening, and we're going to look back to see when that bottom was put in against the run of that halvening. But this right here, guys, this weekly close is going to be paramount to finding out, are we starting a bull run now, or are we going to start it later on in the year? I believe we're going to start it later on in the year, not because I have a bias to the bulls, is because the facts have shown me that. And I'll show you which facts those are. Let's go to the price, and we're going to erase all of this data, and we're going to erase everything. Remove the drawings. We're going to hide all indicators. Oh, wait a minute. What happened? Oh, no. Remove drawings. I don't want to remove the... there we go. Okay. Now, let's do this, guys. We're going to look back at 3 halvenings. Okay? 3 halvenings. We're going to go back to... That's why we're using the Bitstamp, because we have the data to support it. November 28th, 2012. November 28th, 2012. So let's go, actually here, let's just go here. November 12 November. And what is it? 28th. 28. Okay, let's go there. There we go. Oh, damn it. Oh, well, it's okay. Let me go ahead and just open this up here. Let me open this up. Let me get in here. Let me get in here. And we'll look at it right now. All right. Let's go in here. November 28th. Right there. 26th. This is when the Bitcoin, the vertical line. This here is the halvening. This is the halvening right here. Okay. This is the halvening. Now, when we look back here, look, prior to the halvening, we dipped. When we dipped hard, look, we were here. This thing dipped. The market was going up. Think about this. This is all green, 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 up to here. And then the market slammed down 56%. 56%. Do you think this marked an opportunity for you? Now that you're looking back, do you see, you know people were fearful, but in hindsight, it was a great opportunity. Now, let's do this. 56%, we'll leave that there. We don't need that right now, but I want to do this. I'm going to do a date. From the halvening to that, when did that happen? 105 days. 105 days prior to the halvening, we had a massive dip to the downside. Okay, let's go to the next one. July 9th, 2016. Let's take a look at that. Right here. July, right there, 6th. We'll do the week of the 11th. We're doing on the week of the 4th, right here. Actually, yeah, the week of the 4th. It wasn't. That's the beginning of the week. So that there. Okay, that's the halvening. All right, that was the halvening right there. That there was the halvening. Now, show me the low prior to that halvening. The lowest point prior to that halvening. We had a dip here. I guess you know what? To be fair, you know what? We should do this to be fair, because there was a bear market prior to it. So let's do this just to be fair. The low of the bear market. Let's measure that out. The low of the bear market that we did not do here. So remember, we had a drop here. Was there a lower point than this? Yes, there was. Right in here. There was a lower point than this, and that goes back. Date range. That goes back to this lowest point. 301 days. 301 days. That was the lowest point. Then we had a nice little run up, which I would say this is like what we're having now. This is like what we're having now. So this was last year's 15,500, right? This is last year's 15 with all the sell off and the Celsius, and this is this run now. So this run that we're having now on the next dip, this is where I'm saying to be prepared for that $20,000 range. This would be it right here, 105 days prior. But a year before, almost a year before, is when we had that low, which is what that equivalent to the $15,000 that we had last year. So now let's go here. Let's go to the halvening here. This halvening, look, this halvening was July. Let me make sure, July 9th. So the week of the 4th, it fell in there, 2016. Now, what was the lowest point? Was right there, the lowest point. Let's look at the date range. Where is the date range? Date range from that halvening, lowest point happened in, again, August. You see this? August 24th was the lowest point before the halvening, 315 days. We were running up. We're moving nicely here. Then we had a drop. We dropped from here to there. We came up. We had one drop here. And then this here, we took off right in here. Right from this drop. And then look, there's no lower point than this drop. So if I take this and I mark it right there, you can see here that when we dropped here, I don't know what this drop was. Let's measure this drop. This drop was 21%. 21% drop right before. That was the lowest point. That was your last chance. Let me look at the date range again. Your last chance date range. Here, to here, 175 days. So again, the 315, like we looked at the prior one, 105 days on the prior one, 175 days on this one here. And they fall in the same month, the middle of August. Let's go to the next one. 2020. 2020, right here. We've got May 11th, 2020. There it is. May 11th, 2020. Vertical. Boom. Right there. All right. Let's dissect this. 2020. This was interesting because we had the COVID. We had a black swan. Okay. But I want you to do something. I want you to do something for me, because black swans, we cannot TA a black swan. It happened. Fine. We know that was the low. However, for the sake of this argument, I just want to, I want to do this. I want to do this here. I want you to pay attention to this low right here. Okay. So everything below this green line, I want you to ignore just for right now. The reason I want you to ignore it is because this was the actual low. And if you look at what we did in 2019, we hit the top, we hit the underside of 618, and we were coming down. We finished that recovery, and we're going sideways, and we started heading back up, and then the black swan event happened with COVID. Okay. Had we not, if you put a line right here, had we not, look, we would have kept on pretty much. We would have come up, back tested this resistance. We broke out of the resistance, back tested, and kept on going. So I want to be fair to the charting that we did for the prior halvenings, and let's not use this as the low, even though this was the low. Let's not use this, just so we can compare apples to apples is basically what I'm trying to say. I don't want to have a bias. I was, oh, you're ultra biased, you're ultra bullish, you're ultra bearish. No, let's be fair. Let's compare apples to apples, and let's ignore this anomaly right here with the COVID, because we don't know if there's another black swan coming. We can't chart that. So let's go ahead and just look back here. This was the low. 147 days. 3 data points. The first one, 105 days. The second one was 175 days. The third one, 147 days. Do you see how similar? Now we have to compare the lowest point of the bear market to the halvening. The first one was 301 days. The second one was 315 days. And this one here would have been right in here, which when it went down to 31,081. So let's look at that. How does that line up? How does that line up? Date range. How does that line up? 518. That was a lot more. 200 days more. 200 days more than the previous ones. Okay, so all right, we have one metric that blew out the other one, the other two. But we have 2 that are similar, and we have 3 that are similar 150 days prior to the halvening. So let's try to use that data, as we know that the approximate halvening is happening sometime in March or April of 2024. So let's just put April 1st as a, yep, that's it right there, April 1st. Now, where are we? What's 150? Let's do this. Let's take the average, which is, let me get a calculator. Let's take the average. We have 147 days plus 175 days plus, what was this here? 105 days plus, oh, hold on. 105 plus 175 plus 147. Okay, and you divide that by 3. And I can't believe I did that. Hold on. Sorry, guys. Plus 175 plus 147 equals divided by 3. And that's 142 days. That's an average. Again, it's not going to play it exactly, but we are analysts. We are trying to find probabilities. We're trying to find averages. We're trying to dissect. Let's see here. 142 days. 142 days. right about there. I'm going to put this in red. I'm going to put this mark in red. Oh, wrong one. Okay, right there, vertical. And I'm going to put this vertical line in red as our marker, the one right before the dip right before the halvening. Now we're going to take, where are we now as far as date range? How many days? Actually, I want to see this. Sorry, I want to see the lowest point. That's what we did before. We took the lowest point because we haven't broken this. So this right now is our lowest point. Where are we in relations to the lowest point that we hit? We know that the bottom 497 days compared to 518 days. Very close. Within what is this? 20 days, something like that. 497, 21 days. 21-day difference from hitting the bottom. So with that in mind, look at this. This puts it an average somewhere in November. Do you see why you cannot be ultra bearish? Because tell me we don't have room. Please tell me we don't have room to do this. Look, all right, I can leave that there. Tell me we don't have room to do this against this. Okay. Put in that higher low. Okay. That we cannot bounce so that we could then come in and hit the lower high. We have the lower high here. So we have a high, low, lower high, lower low, lower high, lower low. Now we reverse the trend. Tell me we cannot get up to $48,000 prior. Hold on. Right there. You don't tell me we have room to do something like this? We don't have room. Wait, where's my path? Here we go. We don't have room to do this. Here. Put in a higher high, and I'm going to look to the left to put a higher high. I'm going to say somewhere about here looks like a good resistance point right in there to go into here, back test the high of this here to go into something like this, into possibly, we're cutting it close for that, right there. I'm squeezing it. Now I am having a bias. I'm trying to squeeze hold on. I'm trying to squeeze it. Tell me we don't have room to do something like this. History shows us that this is possible. History shows us. And here we have a big drop-off. Then we have a big drop-off. You see how I can make a case for the... I don't have to be ultra bearish or ultra bullish. I can make a case for both. I can easily make a case for both. But history tells us that the drop happens about 140 days prior to that happening. So when you just remove your bearish or bullish outlook, you have to be honest. I mean, think about the reverse of this. If this is the low, could we just break down from here? It seems, I'm not going to say it seems unlikely, but this to me seems more probable since we already reversed a trend. This to me seems a lot more probable. Now keep in mind that we have a camp divided between we're going into a recession to we already had a recession. Between the broader markets are going into a new bull run, and they haven't seen the worst yet. And the camp is pretty much split depending on who you're following. I don't have a bias because I'm not smart enough to know. I haven't followed broader markets like a lot of much smarter people that I follow that understand broader markets better than I do. So in that, I cannot give you an opinion because I don't know. And I know my limitations. I know what I can and cannot speak on. And that is one subject that I cannot arguably speak on with any type of confidence because I'm not well versed in it. But I'm fucking really good, well versed when it comes to crypto. And unless broader markets collapse and we draw down 25, 30%, I cannot see this I cannot see this not happening. So I guess that's the best way for me to talk about broader markets, because I don't know. So the caveat here is going to be this: if broader markets stay neutral or go up, this will happen. If broader markets drop 30%, like some people think they are, then we won't see this. But at least I'm prepared. At least I know which path I'm going to follow. Again, looking at the correlation of broader markets from people who are smarter than me, and then be able to understand why this didn't work out. Does that make sense, guys? You know what? I want to do something here. I don't know if my path was correct. I want to do a harmonic pattern, because that's going to be a lot more accurate for me to, yeah, okay, I'm pretty close. I got close. I was using these areas here as resistance. The harmonic pattern actually comes in at these candle bodies. So this would be a little bit more accurate than this here. That would be there, and then a drawdown into retesting this. Look at how perfect this area of prior resistance was. You see this becomes a prior resistance. Just so you understand, when I put a path, I base it on prior support and resistance. Even if I don't put my lines, you can see how they make sense. You can see how they make sense. So that's kind of the path I'm looking, unless something happens with broader markets. I don't see a reason. Now, what's the invalidation of this? Remember, we have to have an invalidation. What is the invalidation of this? I'll show you very clearly. Clearly, invalidation is going to be right here. We drop below 19,500, and that invalidates the path to the upside. That invalidates it. So that this whole thing right here, all of this goes away. All of this goes away. All of that goes away. And now we're looking for, what are we looking for? Let me get rid of this. Now we're looking for either this to hold. Okay? We have to be honest with yourselves. If this drops down here, actually drops. Invalidation is closing below here. So if we close below here, and this now becomes resistance, now we have to look for supports here. Where do we look for support? Prior resistance. This now becomes our area that we are going to hope it holds. When will I think that the $12,000 Bitcoin camp has a leg to stand on? Right here. Right here. When we close below that. Not hit it, not put it in a lower low, not come down and sweep the liquidity here, because a wick down here would be a liquidity sweep. So that wick will be a sweep of this liquidity here. Candle body close above it. I would consider this a double bottom. And I would then look into what's our favorite bullish pattern? We talked about that. A W, right? Now, if I do this, I'm going to actually erase all of these drawings. I don't need these drawings. Erase all of this. Then, if this is the bottom and it holds and we get a candle body close above it, what letter do you see here, guys? What letter do you see here? Think about this. What letter is this? What letter is that? You see? I mean, fucking come on, guys. It's not that difficult. And look, where's the completion of that W? Where's the completion of that W? Right in there. Look at all this trapped liquidity in here. Tell me this isn't. You see how, but do you see how before we get here, it's a matter of, okay, well, this is what we're looking for here. This is the most likely scenario. However, if we invalidate it, then we look for here. And if this gets invalidated, then we look for here. Now, let me give you the bearish case. If this doesn't happen as W, now we look back here and we do this. What do? We grab prior resistance, and we have to be fair. Look, we now grab prior resistance, and let's look at prior resistance. Let's zoom in. Candle body close, wick, wick, wick. I think I'm being pretty fair. And then 12,000 is back on the table. Then 886 is back on the table. Let's look at HyBlock spot liquidation data. No, excuse me, not HyBlock. TradingLite spot heat map. And we had, oh, why is it doing this? There we go. Sorry about that. We have intensity at 25, and then let's look below. Let's look below. What do we have down here? We did have a wall at 15,000, which they have diminished. But we have nothing as of right now down below at 12,000. They even removed the one at 15,000. Look, you can see there was a 352 Bitcoin wall at 15,000, and now today it's 241. By next week or next month, it could be less. But the interest is not there anymore. Interest is not there. At the moment, this could increase and decrease, and they can spoof it and take it out. But as of right now, there's no reason to think down here. There's no reason. There's too many points above before even getting down into here. I hope this data makes sense, guys. I hope you understand that. Allow the data to show you the path of what the likely scenario is going to be, and give yourself an honest invalidation point and a validation point where you can add, and a invalidation where you can cut. If you do that, guess what? You're not worrying about whether we're going up and down because you don't care. You don't care. You zoom into an hourly and a 2-hour time frame, and there's plenty of moves to make within here. Look at all this. Look, the bulls are already stepping up. This is the hourly time frame. Look, the bulls are already stepping up. So what am I looking at as a trader? What am I looking for as a day trader right now? Day trader, hourly, I'm looking at this, and I'm saying, okay, bulls are stepping up. Now I want to look at momentum. I want to look at the MACD. Is the MACD starting to shift the momentum? Is the volume oscillator printing in higher lows? Are we going from a bright red to a pink? Let's go look. No bias, just look. Right now, no, we're not. We're in full red. We're still red. However, look at the MACD, look at the cross indicator. When these two separate, this is the first sign of, hey, pay attention, because these don't work they don't stay apart very, very long. When these are apart like this is a great opportunity for a scalp trade, because you know that these two are going to touch very quickly. They don't work apart. They work together. So what's my next step? I go to the 30-minute. I want to see at what time frame does this start to curl, and at what time frame does the momentum shift from negative to positive on the volume oscillator. Let's look at the 30-minute. Okay, now we don't have the curl on the MACD just yet, but we're starting to see a shift in momentum on the volume oscillator. What this means here, why this is red and why this is pink, is you have more green coming in here on this volume oscillator than you do red, but it's not green because the MACD is below the cross indicator. The moment once this MACD crosses a cross indicator, this then becomes green. But because we're below it, it's going to show pink until we get right above this medium line. Now let's go to the 15-minute time frame. There we go. You see this here? We are now starting to shift. The MACD is starting to get caught here. And pretty soon all we need to do is see that hook. Look, higher lows, higher low, higher low. See the shift starting to happen? Go to the 5-minute time frame. Much more different story. On the 5-minute time frame, we have light green because on these two volume bars here, these two volume oscillator bars, there were more sellers than buyers, so it becomes light green, but it's not red because the MACD is above the cross indicator. So understand how what this shading means, how you can apply this, and what you're looking at. So from the 5-minute time frame to the 15-minute time frame, there's a shift going on. That shift, you then have to allow the shift to catch up on the 15-minute. And then what do? Then you look from the 15 to the 30 and you see, and you want to make sure that it maintains a certain momentum. Because look at the minute time frame. We came out of it. We went up above the medium, but now we're falling back down. And we're falling back down. And yet look what's happening on the 5-minute. We're getting negative volume on the volume oscillator. Do you see how all of that is tied up together? It may seem a little confusing, guys, but when you live in that time frame, in the 1, 2, and 5-minute time frame like I do, it makes much better sense. It may be a little confusing to you guys, but it's just a way. Hopefully, I'm explaining it correctly, and I'm explaining it in a way that makes sense. Hopefully, I'm doing that. I don't know yet, but it usually comes with time and experience to understand the relationship between these lower time frames and how it trickles over to the higher time frames. We're not out of the woods, even though the 5-minute, it's showing us that we're turning around. There's a lot of things happen within those time frames that need to happen, and we need to start shifting that same type of momentum. And we barely see a shift on the 5-minute. 15-minute, still bad. 30-minute, and go moving. Look, you can see it yourselves. It's very, very every time frame above the 5-minute is bad. So, what am I looking for the end of this move? I'll tell you what I do. I'm going to look at the 15-minute time frame, because the 15-minute time frame to me holds a little bit more weight. And as far as the smaller time frames, that's the equivalent to the weekly. When you're a scalper, you're looking at the 30-minute, the 30-second, 1 minute, 2 minute, 5. For me, this is our weekly time frame. Just like when you look at the weekly, you try to come up with an macro view. This is my macro view on the 15-minute when you're a scalper. Now I'm looking for a bullish market structure inside the 15-minute time frame. What does that mean? That means I'm looking for a W within here. I am going to then take my EMAs. And this is why I'm an EMA trader, but I want you to make sense. EMAs are telling me right now that the wall that's keeping the price action down is the 50 EMA on the 15-minute time frame. So that speaks volumes to me, because you know what I'm waiting for? I'm waiting for the price action to move up, hit the 50 EMA, come back down, and give me what? That market structure that I can start building a trade setup on. If we hit the 50-minute time frame. Sorry about that. If we hit the 50 EMA on the 15-minute time frame and we reject and we put in a lower low, boom. What I'm looking for is invalidated. Now I got to start all over again. I got to find a market structure that is non-biased. So if I see a W, what I mean by that is this. If I see a W put in right here, but we haven't hit the 50 EMA for a resistance, I'm not really being truthful to myself, because the middle portion of this W, that's going to be my neckline breakout point to enter into that long trade. So that has to have a substantial meat to it. It's got to have a substantial area of resistance. And because we hit this wall here on the 50, this is what I'm looking for most likely. The 50 to come down, this to come up, meet that 50 the way it did here, confirm it as resistance, give me the proper market structure, come back down against these lows. Doesn't have to come down all the way down below it. It may sweep it. I would love to see a sweep. A sweep is one of the most bullish markers that we're going up. A sweep below that. And I've talked about this a lot. I've showed my Telegram group. If you're not in it, guys, send me a DM. It's free. Just send me a DM and I'll give you access to my free Telegram group. A wick below here is almost an automatic buy, guys. And it happens 90% of the time. Why is that bullish? Because it's sweeping this liquidity. It's sweeping this liquidity, and that usually we have a candle body close right here at the base of this, and we start moving up. Hope that makes sense, guys. I'm not going to touch on any other coins. I think right now all eyes on Bitcoin. It's what's going to control the rest of the market at this point. So just we could continue to drop. There's nothing bullish here on the lower time frames that has given me any type of signal that we are putting in any type of bullish market structure yet. So 15-minute is the one I want to see that being formed. Once that is formed, then I can start, like I said, creating a trading plan around that and start looking for targets above for targets. Target price 1, target price 2. Maybe we go back up to 28,000. I don't know how much of that heat is still left. So there's a lot of things you need to look at before you can make a decision of where things are going to lay. First things come first. Bullish market structure here. Once that develops, you have time because you want to take the neckline breakout. Once you start seeing that develop, then you can start looking at HyBlock and see where you're at that point. Then you can start looking at my buddy's daily crypto trader, his new tool. He's got a lot more time frames to look at. He's got 1, 2, 3 days. He's got this HyBlock just has 1 week. He has 1, 2, 3 weeks. He's got multiple months. His is more detailed, so I really like it. Again, I'm just not very speedy on it because I'm still trying to learn all the different ins and outs. So I use HyBlock as a default right now, but I'm shifting to his. I really enjoy it. Anyhow, we are looking for that proper market structure. Once that is put in, guys, then we can start looking for targets to the upside. Hopefully, we get that continuation. But overall, we need to wait. We need to wait, and we need to allow the charts to show us which direction the market is going. And we don't know yet. It's too soon. We can easily continue to go down because there's 74 billion. No, not just 74. There's hundreds of billions of dollars of reasons to continue to drop. Hundreds of billions of dollars. Think about that. That's a lot of reasons to still drop. I hope this was informative. Please hit the like button. Just hit the like button, guys. That helps the algorithms in YouTube get this video out to more people. If you want to join my free Telegram, send me a DM. I also have a Discord where I teach all of this stuff, and we're opening up a free section of that Telegram of the Discord coming soon. So watch out for those announcements. All right, guys. Have a good day.